Okay, welcome to all investor. Welcome to Smart Investing with Philippe. Please, before starting, subscribe and like and leave a comment. So we can see that the market has changed quite rapidly. The last we saw a rebound from the bottom, and now we are testing again the lows of the March. Let's have a look for QQQ. Technically, where we are. You can see technically we are testing the low that we've seen in mid-March. So nothing really dramatic. We have been rejected on the 200 moving average, and then we went straight back to the low of mid-March. But it actually it looks like the market wants to defend that support of 470 for QQQ. So I would say that this is not ideal, but this is not uncommon that with the uncertainty and the volatility and all the tariff talk and all the pressure and all the speculation about inflation and growth and so on, that investors are very nervous. And you can see that the VIX has increased quite dramatically over the last today compared to the whole week. You see the VIX went down sharply, but now it increased. It increased a lot. I mean, you see, it went down dramatically from the level of 29 to the level of 16, 17, which is almost normal. Huh? And then suddenly, bang, it just jumped back to 21, 22, which is a high level historically if you look at last year. But you can see that last year we have reached that level of volatility 1 time, 2 time, 3 time, 4 time, so and then 5 times. So you see, it's not uncommon. So you shouldn't be too worried to see this level of volatility, because last year was a very big bull market, and we've seen this level of volatility for 1 time, 2 time, 3 time, 4 time, 5 times. And we've seen correction of this magnitude also in 2024. You see, 2024, look at how many corrections we've seen. 1 correction, 2 correction, 3 correction, 4, 5 correction. 5 correction, maybe that actually match with the 5 time that we see the peak on the VIX. So you can see the RSI is not showing any sign that it wants to go back to the 30, which is a good sign in its way, but it's going back again. But you can see the moving average is still showing an upside trend on the RSI. SPY, you can see SPY the same. They've been rejected at the 200 moving average. Clearly here rejected, and you can see that the RSI is doing the same as the QQQ. I mean, they move in tandem. It's not specific to technology or to all the stocks in the S&P 500. It seems to be moving in tandem. But so far, you see, we are tested again the lows, but we have not break below the lows that we've seen in the past. So that's already a positive. TLT has moved slightly up today, with 138% up, but we are not reaching back to the high of 92. So if we go now to the Max 7, this is probably where we see the biggest downside. You see, Max 7, we have seen a downside. Now we are back to the 46 level, and we are testing again the low that we've seen back in the beginning of March. You see, we've been trading on this range since the 7th of March to today. So it's almost a full month we are trading between 46 and 48. You see this channel here between the two red line? We managed to break out, was rejected by the 200 moving average, and now we are back again in the low of this range, you know? You see, I'm zooming so you can see properly what I'm talking about. You see the range here? But we have not broke down the range, so nothing to panic. And you can see the volume is much higher here than it is above. So this means that there is a lot of people buying at that level. So if we go to stock specific, AMD just was rejected from the 55 moving average and now move back, but it doesn't move back to the lows. Of course, it's not nice to see it coming back to 103, but again, we are seeing a lot of volatility in the market, a lot of uncertainty, and a lot of bearishness. So not surprising that we are testing again the lows. SMCI, nothing special. Palantir, small pullback also, but 85 is still very high for a high speculative name like Palantir. Palantir is still valued at 100 times the sales or 100 times earning. And if the market was extremely bearish, why is Palantir trading at this level? Bitcoin, you can see same, still hovering around the 200 moving average. You see, it has been hugging the 200 moving average for a while, since the beginning of March to today, straight on the 200 moving average. Nothing has changed. IWM, same, just retrace back to the 200. 200 still defending very strongly the 200 marks, because if it goes below the 200 marks, I told you that it will go back to the long-term trading range that we've seen back in 2022, 2024. And all the breakout already since 2024 has been erased, totally erased. So small cap is the unloved investment in the US equity market. I mean, if you have small cap for the last 5 years, it's done absolutely nothing. So if you look now at the Max 7, you can see Amazon just went back also to the 192. Google just broke the lows of 160, which probably they will test the level of 147 back on September last year. Google is a very, very volatile name. We have actually, how much we've dropped the Google since the high? Close to 25%. That's crazy, huh? For a high quality name like Google. Meta, we are tested the lows of March, and we're testing the 200 moving average, but we are not breaking below the 200 moving average. So I'm not going to be worried about that unless it breaks clearly and decisively below the 200 moving average. But Meta is a very good name. Why you worry about being cheap? If it becomes cheap, it's a buy. Netflix, very solid name. You see, still far from the 200 moving average, and is barely just trace. I mean, this name is basically rebounded sharply from the low of March, and it's still extremely high compared to the low of March. You see, it rebounded, and now we are clearly almost 10% above the lows, and we retraced back from 17%. So Netflix is a big cash flow machine. Regardless of what happened in the economy, people are not going to get rid of the Netflix subscription. They are too addicted to TV. Nvidia, interesting. They actually retrace back to the low of March. I think it will probably retest the level of 106. Or they will break and reach the symbolic numbers of 100. If it reaches the symbolic number of 100, I will stop to buy Maxwell. I will buy NVDA. Or I will sell put at 100. Because NVDA at 100 is a very, very, very good price, Very, very good price, because that means it retraces back almost 35% from the high. That's crazy for such a big name, such a high quality name, Otherwise, nothing really interesting to mention. So let's look now at the economic calendar. Economic calendar, we saw yesterday that we had a PCE number and GDP growth. GDP growth, continuing jobless claim. Continuous jobless claim is very good, in line with the forecast. Nothing really changed. Core PCE 2.6, 2.7, you see, in line. Slightly well above the prior number of 2.2. But still below the 3% growth rate, 2.4%, 2.3%, 3.3%, all in line with expectation, and nothing really showing that there will be a recession. Initial jobless claim, 224,000, forecast 225,000, prior 25,000. I mean, very much in line, we don't see any jump into unemployment. Consumer spending 4%, forecasted 4.2%, and prior was 3.7%. So you see, you have a slight increase on consumer spending. So I don't see why people are so nervous. But anyway, that's all due to the tariffs and the speculation. It's not showing in the number yet. But people are worried it's going to show in the number. But so far we don't see it in the numbers. Core PCE on Friday, index 0.4, forecasted 0.3. Core PCE index year on year 2.8, 2.7, slightly higher than forecasted. Otherwise, you have the Michigan 5-year inflation expectation 4.1 as opposed to 3.9. The people expect the inflation to pick up. Consumer confidence is slightly below forecast, but also quite marginally lower than the prior number of 64. Now we have 57. So I guess this is what the market is afraid. The market is afraid of the effect on tariff, on the consumer, on inflation, and on the growth. But so far it's all down to speculation. We don't see yet nothing in the numbers. At least if someone want to comment and show me what you see in the numbers, then I'm happy to hear from you, because I don't see anything showing in the numbers. So all this is volatility and fear as usual, and is not on the concrete numbers. So now if we move down to the headlines, you see stock fall as trade war clouds economic outlook. You see, this is what we talk about, all speculation about the trade war and the impact on the economy. US economy grew 2.4% last quarter as corporate profit jump. You see, this is positive, right? The US economy grew 2.4%. Last quarter, corporate profit jump also. But it's all down to the trade war, all down to economic policy. And I mean, this is the volatility we need to stand and we need to bear at the moment, you know. But if you panic, then you panic for nothing. Trump tariff auto threats on allies, that's by trade war. You see, Trump has levied 25% on imports of all cars. I guess it's increasing the volatility and fear that it will have an impact on other countries, but of course it will have an impact. It will have an impact on the US, on the other countries. It will have an impact on everybody. So if the economy, people are worried about the US economy, so the European economy, and so Japan, and so the global economies, they will not be immune to anything impacting the US economy. So other than that, I don't see anything to worry on the economic front. Inflation, consumer spending, the market, of course, are highly volatile, but we are still much below the peak of the volatility that we saw over the last 2 weeks. We have not broken down below the lows of this week or the last week, so which is a good sign. That means the market, although they pull back, therefore there will be gap fill, but actually they went well below the gap fill. Because at first yesterday I see, they just gap fill, you know, which is normal. When there is a gap up, then the market usually come back and gap fill, and then after continue its way up. But here they went just gap fill down, and then went lower. Anyway, don't worry, you know. Just be relaxed, you know. I'm with you in the market, you know. Just be relaxed, you know. You can be so nervous for this type of volatility, you know. I understand this is very stressful. You don't like to see red in the portfolio. I don't like either. But I was selling a lot of calls. So all these calls are cash flow in my pocket, you know. All this red is just unrealized losses. It will come back. But all the calls that I'm selling on a monthly, all these are cash flow in my pocket, so you should also do that. Do some hedging strategies and income generating strategies, and just relax at the meantime, you know. You have an existing portfolio, you can make money with your existing portfolio. You don't need to wait the market recover. You can sell calls, you can sell puts, you can do many things. So now this is the weekend. Try to relax, don't stress too much. Yesterday I had no time to do this market update. I'm sorry, because I had a very important consultation with a client. But I will be with you throughout this very difficult time. If you have to go much lower, then we will go much lower. But the lower we go, the less the risk and the more the opportunity to top up and to buy. I will go and buy more if there is the market go lower. I will buy more. I will focus on Max 7. I will focus on QQQ. I will not top up individual stocks, because buying Max 7 or QQQ on discount is a great opportunity, you know, especially when it rebounds. Why take the risk to top up your individual stocks unless you have extremely high conviction on your existing individual stock holding? But when I see so much discount on the index level, I don't want to buy individual stocks or top up my individual stocks. You see? Anyway, thanks so much for watching. Subscribe, like, and leave a comment. Thanks so much. Have a good weekend and enjoy life.